Ja, herzlich willkommen zu einer neuen Ausgabe vom SI Talk. Und es gehört ja schon fast zur Tradition, dass ich, wenn ich in Vancouver bin, bei Garth Braun vorbeischaue, dem CEO von Blackbird Energy. Blackbird Energy ist nach wie vor eine der besten Story, die am Markt sind, was Öl betrifft. Natürlich hat die Company auch gelitten, klar mit dem Ölpreis, und deswegen ist es für mich umso wichtiger, Garth heute da zu haben, um mit ihm genau diese Punkte durchzubesprechen. Garth, thank you to have time for me. Like every time when I come to Vancouver, it's a pleasure to be here. The last 6 months or 5 months when we make our last interviews, I think it was September, was not really the best for the oil market. Oil price going down to $50, and how this oil price hit also Blackbird, and what was the impact to your company, this lower oil price?
Well, first off, I want to say Dankeschön for the good introduction, and Guten Morgen to you and also to your audience. We should also sometime plan to have you come to my main office, which is in Calgary, because that's where Blackbird is really based, and that's where I really work from. But you've got me at a time where I'm on the West Coast presenting to funds. So your question is what has the effect of the reduction in commodity prices? And we have to be careful not to just speak about oil, but gas, and also the correlated liquid to gas and oil being condensate. And I will say is first off is Blackbird is really not a producer at this time. We are in the exploration period of beginning to explore our Montney project just south of my hometown of Grand Prairie. And so I'm going to say agnostic to commodity prices, because we're not selling our commodity at this time. We're expecting 215, end of 215, beginning of 216. So therefore the fluctuation in the commodity price on a cash flow basis for us is not affecting us. And we have a very strong balance sheet at this time. I will say this to you and our audience, that post-completion of these wells and some land purchases I plan to make, we'll have post-completion of the wells in excess of $27 million, no debt. So we have no constraints on our company in regards to that, which allows us that capital to continue to drill. But let's now go to economics. First off is we have a low oil price today. That low oil price is based upon both excess supply and a reduction of demand worldwide. And what this does cause is many companies out there that are producers are now having the challenge of making decisions of capital budgets. And I think you're seeing across board several companies slashing their capital budget programs, reducing their drilling, because they want to only drill with cash flow, not capturing their capital. And therefore, you're going to see rig reduction. We're already seeing it. I think that within the U.S. there's talk of, for us to get a balance out on supplies, we may need to see rigs move from that 1,200 rigs active at this present time to possibly getting into the very low 900 rigs active per week, even into the high 800s, which could take another possibly 4 to 6 weeks.
Is this downsizing of the drilling activity, has this also the positive impact that the drill costs going down?
Absolutely. It's a very good question, Joe. In fact, in Blackbird, I can tell you 2 things. Number one, with the reduction of activity already that we felt, we've gone back to many of our suppliers and done 2 things. Number one, in a market where people are reducing, they may extend their payment process out. In actual fact, last week, Blackbird put a policy together that I wanted to do, where we now pay our trades within 15 to 30 days of their work. Where other guys are maybe going to move out to 120 days, we accelerated. We then went back to the trade and said, look, coiled tubing unit, sand, all the operators on our completion program, if we pay you quicker, can we have a reduction? And we've seen in certain components of our completion that we're seeing up to 10% reduction in costs. We may even see that over time as we move through this year, a 20 to 30% reduction on certain components. Now, salaries are always very inelastic. They will not drop rapidly. What you'll probably end up doing is getting better crews, the top crews that are remaining in the company based on slowdown, to be working on your property, which will improve efficiencies. But we are seeing a reduction in costs. We've seen it already by implementing this more rapid payment program that helps suppliers and service providers, that we're getting cost reductions. Okay. I think that's going to benefit us when we drill future wells, and also when we build infrastructure, because we're in that point of right now, as you're aware, we've drilled and now in the process of completing our first 2 wells. Once that, we will need to build a battery to knock our liquids out. That cost of building the battery and the infrastructure around it potentially will see a benefit in reduction of cost.
I know exactly that you are in the stage of completion of the well. Do you can say anything about this completion? Do you see some results, first results? I know exactly you cannot say something about before not the 10 days or 24 hours a test is done, but how the completion worked well?
What I can tell you is first off, when we drilled the wells, we were very happy the way the wells drilled. We're on time and budget on both wells. What I can also tell you is I like very much the well profile, how the well looks as we finish drilling it. We want a well that is not moving up and down as we drill through the formation. It has a very nice, what we call, profile. In regards to what we see as we drill, I don't want to promise something. The time that we truly can evaluate a well is post-completion, once we've fractured the well and we've flow tested it back.
When do you think you have finished this fracking and completion?
We would be expecting, as indicated, that we'll be announcing our results in the middle of February. And so in actual fact, we are in the process of completing the well right now. And both wells, we're actually completing both wells sequentially. So we're completing a middle and an upper Montney well, one after another. So each stage we're completing back and forth, middle, upper. So we'll have results probably middle of February, and then we'll announce. What I can tell you is, and Joe, you asked me a question pre this conversation, have you pulled back, on what you're doing based on oil prices? And in actual fact, these are the first 2 major wells that Blackbird has drilled and completed. This is our 100% Montney project. So instead of pulling back, I looked at the commodity prices and I said, what I wanted to do was give maximum opportunity for Blackbird to achieve something. So instead of trying to achieve what I would call a median well, we have increased our completion program and also de-risked it by going to a cased completion, what we call a plug and perf system, where the lateral portion is fully cased and then we perf and complete, versus using a packer system and where we use ball drop. In a ball drop system, sometimes you can have stages that do not initiate, or you have the risk that the well begin to sand off and we're not able to get the material into the formation and you have to back off. With a plug and perf system, if we ever have a period where we sand off, we can recirculate out, go back into the well immediately, and then reinitiate the completion, and we lose no interval or stage. So we've actually applied greater money to our completions program. And one thing interesting, from 3 years ago to today, the amount of material that we're injecting into the formation has increased over 700%. So previously, 3 years ago, we would try to put 20 tons of material in over a 100-meter interval. Now we're trying to put in 140 to over 160 tons in that same interval. A substantial increase.
So,
and I'll just say why, I know you're going to ask, is that we create more fracturing in the Montney. We create more channels for the liquids to come out. And remember one thing is where Blackbird is focusing is in the liquid-rich corridor of the Montney, where we're seeing production of liquids in excess of 100 barrels per million feet of gas, okay? And in these tough economic times, that's a very critical thing for you to understand, is that even in these low commodity price corridor, the economics on liquid-rich wells still is sustainable, okay? So number one. Number two, when you're aware that you're in a liquid-rich corridor, You want to fracture the formation up and create these channels so the liquids can come out. So your completion technique actually changes to allow the liquids to come out, which is what Blackbird has implemented. And I will say is my team has done an amazing job of putting a very sophisticated program together, which matches up probably with very much what Encana Corp and ARC Resources has done, two leaders in the industry in this kind of a completion. We're not doing a science project. We actually have seen what other leaders have done, and we're implementing what we believe is a successful completion program.
Okay, from the investor standpoint, which milestone we can think what's coming up in the next few months from Blackbird? First is the completion.
Well, I think that, first off, let's not jump over the completion. The completion will be very critical because we'll be announcing results on 2 wells. 2 wells in 2 different zones of the property. And what we're doing is we're actually linking now wells that are to the southeast of our lands and wells that are to the northwest of our lands. And unless there's a donut hole in the middle of the Montney where Blackbird has it, we've now mapped that the Montney is consistent through this area, and we've defined the liquid rich. So what this is going to do is talk about an upper zone and a middle zone, which is significant. Number 2, it's going to show that the resource goes through our lands and actually probably is going to demonstrate that at least half of our lands to the west is likely to be very productive. That's the first thing. We'll also define the liquid rich components of each, the upper and the middle zone. You also can expect that, as we've indicated in the past, we're going to continue to aggregate more land. Through our drilling, we were able to, in the past, as you know, in Q4 of last year, we were able to pick up land, 10 sections, for an extremely good price. Because of what we had drilled, we were able to validate. We will continue to use that model to buy land in this corridor to build our platform, because as we prove it up, we can map further out, which puts us in a unique position with our drilling that we can capture more land. The third thing for your investors is that then you're going to start to see us focusing on infrastructure. You'll see us move forward on plans for pipeline to our property or tie-in, and also our battery to knock our liquids out. And also, you're going to see us begin to go out and explain the story. So in the initial period, as your investors want, is how do you build value and get your market to move? One of the things is, do you have plans to reach out to more institutions? Do you have plans to go speak? Well, I'm going to be speaking at a conference in February. I'll be doing very significant institutional roadshows in both Canada, United States, in March. And probably going out with some of the analysts from some of the banks that are actually behind our company. And our goal would be is that we continue to drive further analysts to pick up coverage on Blackbird, post the results, or even pre the results of our first 2 wells. The other thing is this: post these 2 wells, we're going to have over $27 million on our balance sheet. My next goal will be to drive our cost for drilling and completions down lower on our wells, okay, and possibly continue to see ourselves drill another 3 to 4 wells this year, further catalysts, okay, which is very, very critical. The other thing that's important is that along with that is that we will continue to define the Montney. We see up to 5 to 6 zones, and I think the audience needs to understand. At this present time, we have 47 sections in Elmworth. What's the size of prize? What is the size of prize? Well, based on 5 zones and 4 wells per zone, we have over 940 wells on our land base, which is just Elmworth, not taking our more eastern lands. Okay, so part of my job is also to let the market fully understand that. Other companies that are looking at possibly Blackbird's assets, we want them to understand the size of prize. And we will continue to develop, actually proving up alternative zones in that corridor. We may not do an exact zone where we did our middle Montney well. We may just vary a little bit to prove up a second zone in the middle.
Okay, I see. Do you see from the price standpoint, you say, you bought the last section really cheap. Do you see a downtrend also in the section with the lower commodity price?
Well, I don't know if we see a lower. I think that number one is we got our land the last round for a very good price. I wouldn't call it cheap, but what I would say is we got it for an extremely good price. We paid right around $300,000 per section, which I think is exceptional if you begin to look at it, that we have 20 wells per section potential. So our well cost on the land basis is very low. What I'd say is that we will continue to look at opportunities where Blackbird may very well be the only company that can validate or map those lands, and we will continue to use good negotiations to acquire those lands into us. But we may be the only company that could be able to capture it. So therefore, when you're doing one-on-one, you can maybe get a better transaction. So I would say is I would like to better my $300,000 per section. We're working on that very hard, and I think you'll be surprised with the numbers we work on.
Okay, to the end of the interview, what is your personal opinion about the oil price? Well, what do you think the oil price going?
Well, first off, my opinion is just my opinion. And I think that first we have to look at the economics of that the oil price is set both by demand and by supply. We're starting to see budgets get cut back in North America, so we're going to see some reduction, but the time lag for that reduction is going to be slow. It's not going to be rapid. And I think that as a junior company, I've seen this mistake being made of over enthusiasm, that people think a recovery will be V-shaped, okay? I actually see it as being much more of a U-shaped recovery, and we have to be cautious that we don't get overexcited about a quick recovery. I think this year we may very well see oil go back up to around $75, but it could be 65 to 75. That is kind of one of the common threads that I'm hearing within Calgary. You know, most of us are talking about a $65 to $75 barrel of oil, which would make Blackbird very profitable, okay? I think that we have to see growth worldwide increase, and I do think that there is some supply reduction. I think also, though, I want to say is that it only takes one major supply disruptor to really cause the shift in supply. And that may come out of Iran, Nigeria, Ecuador, Russia, Venezuela. A number of economies could actually have major disruption that could take 750,000 barrels away per day. And immediately we move off. The decline rates of most of the shale plays are substantial. And in the first year, they decline sometimes 60 to 70%. So therefore, when you pull back drilling, you're immediately going to have the risk that within a time lag, supplies will fall back. One of the countermeasures, I think the U.S. was well on its way to going to 10 million barrels of production from its shale plays. So that pullback is partially being reversed by there is an increase happening at the same time, a reduction of drilling. So two things. Number one, my guess, and it's just a guess, is that we'll see $65 to $75 barrel of oil at the end of this year. Number two is that there is budget cutbacks, and so as a consequence, drilling will slow down. We're seeing it in rig counts already following. And on a conclusion of that is if we have this kind of a price increase, at those levels, Blackbird is a very profitable company with the wells that we're expecting to achieve.
Garth, thank you for the interview, thank you for the update, and yeah, good luck with the completion. And in 1 month from now, we know much more. And hopefully we have time that we can have another interview, hopefully in Calgary maybe. Yeah, thank you for the update. Ja, das war ein Update von Garth Braun, Blackbird Energy. Kurze Zusammenfassung. Die Completion läuft gerade. Er kann natürlich noch nichts sagen, weil natürlich erst nach dem Fracking und nach der Completion das bis ungefähr Mitte Februar dauern wird. Erst dann kann man genau sagen, wie die Flowrates sind. Was aber ganz extrem wichtig ist, dass selbst nach diesen 2 Bohrungen die Company noch immer 27 Millionen in den Bankaccounts hat. Das ist viel mehr als viele andere Companies. Sie hat keine Verschuldung in ihrer Bilanz und das macht die Company wirklich unique. Und was auch ganz wichtig ist, dadurch, dass das Unternehmen ja jetzt eigentlich noch nicht produziert, ist der Impact vom niedrigen Ölpreis ja sehr, sehr gering, weil sie haben halt noch keine Verkäufe und dadurch können sie auch nicht negativ davon betroffen sein. Hat aber allerdings auf der anderen Seite dieser niedrige Ölpreis, hat er auch gesagt, den Vorteil, dass die Kosten sinken in verschiedenen Regionen, geht er davon aus, dass die Kosten um 20-25% sinken, also nicht für die Gesamtkosten, sondern einzelne Teile. Und sie sind auch sogar, haben umgeschwenkt und haben gesagt, okay, wenn wir schneller bezahlen als die anderen, kriegen wir dann bessere Konditionen. Und das ist bei sehr vielen Unternehmen auf fruchtbaren Boden gestoßen. Also von daher ist es sehr, sehr positiv zu sehen. Dann ist so, dass er jetzt natürlich auch sehr viel unterwegs ist in den nächsten Wochen, gerade nachdem die Ergebnisse fertig sind von diesen zwei Bohrergebnissen. Er ist auf Roadshows, es gibt mit Banken ist er unterwegs, er hat sehr viele Termine bei Journalisten, die Medien dementsprechend das aufnehmen werden und von daher können wir im Februar, März sehr, sehr viel erwarten von der Company. Seine persönliche Erwartung beim Ölpreis ist, dass es keine V-Bewegung ist, wie manche erwarten, so wie auch ich. Ich erwarte auch keine V-Bewegung, aber dass es langsam nach oben geht und seine Jahresendeerwartung ist so um die 65 bis 75 Dollar beim Ölpreis und das hilft natürlich auch Blackbird. Wobei man auch dazu sagen kann, Blackbird ist genau in diesem Bereich, wo das sogenannte Liquid Rich Gebiet ist. Das heißt, es ist sehr, sehr viel Ölkomponente, nicht weniger Gas, sondern mehr Öl und das ist extrem wichtig zu verstehen, dass der Mountain Play eigentlich der wirtschaftlich sinnvollste Play eigentlich in Kanada momentan ist und genau deswegen ist es so wichtig, dass er dort dementsprechend seine Position hat. Er hat auch gesagt, er kann bis über 900 Bohrlöcher bereits jetzt bohren auf diesem Gebiet, was er jetzt besitzt. Er schaut, dass er weitere Gebiete akquiriert. Er hat den Riesenvorteil, dass er die Gebiete dort akquirieren kann, weil er teilweise der Einzige ist, der dort das auch bestätigen kann. Man muss ja, um eine Landkonzession haben, das habe ich Ihnen auch schon mal in einem anderen Video erklärt, muss man innerhalb einer gewissen Zeit auch bohren, damit man nicht die Lizenz verliert. Und er ist eigentlich der Einzige, der dort in diesem Gebiet möglich macht, dass er derzeit jetzt dieses bestätigt und dadurch kann er auch relativ günstig zu dem Land kommen. Ja, das war ein super Update, finde ich, von Blackbird. Wir werden sehen, was kommt. In einem Monat wissen wir Bescheid und wer weiß, wo dann die Aktie steht. Tschüss und bis zum nächsten Mal.
Tschüss.
Thank you.
Thanks.